I think there's been three drivers really of the slowdown in Brazil, the slump in Brazil. So Brazil's now in its deepest recession since they started collecting economic data way back at the start of the 20th century. And there are three things really. The first has been the slowdown in China and the accompanying collapse in Brazil's commodity exports. That has probably shaved about 2.5 percentage points off of GDP. The second thing though is that while the economy has been slowing because of the commodity collapse, policymakers have also had to tighten the purse strings on the fiscal side and also raise interest rates on the monetary side. So they've had some policy tightening too. And that's related to the fact that in the boom years, Brazil was really spending too much. So when the slump came, you had these big holes in balance sheets that started to emerge. The currency fell, inflation went up, the central bank had to raise interest rates, and all of that has contributed to a slowdown or the downturn in the real economy. The third thing, on top of all of this, of course, you've got the political crisis that's rumbling on. How this plans out, I think, is anybody's guess, but there's some pretty clear evidence that we can find that suggests that this is weighing on business spending decisions and is also kind of putting off capital inflows too. The problem with the fiscal outlook, so at the moment you have a budget deficit that's in excess of 10% of GDP. And as things stand, it looks like gross government debt to GDP is going to breach 90 percentage points of GDP by probably the end of 2018. So you've got a really dire fiscal situation. The problem is that a lot of this is down to overspending, but those expenditures are mandated by the Constitution. So about 90% of expenditures are mandated by the Constitution. So the government, the Ministry of Finance, really only has control over about 10% of its budget. The rest of spending is set according to rules embedded in Constitution and loose agreements with things like unions and so on. So there's not really much room for changes to discretionary expenditure. Even if you got rid of the whole thing, you'd only cut spending by 10%. So that really puts the emphasis, in the short term at least, I think, on the taxation side. So to the extent that we're going to see any progress in fiscal consolidation, it's going to probably have to come through higher taxes. Brazil's taxes are already among the highest in the emerging world, and I think they're only going to go in one direction over the coming years. Fundamentally though, what we need to see is reform on the expenditure side of the balance sheet. That's going to require constitutional changes to not just these constitutional rules that are embedded in the Constitution, but also these loose agreements that have sprung up between the government and unions, for example. That's going to be quite difficult. And that really gets to the heart of some of the political problems that Brazil's facing. Pretty weak, I think, is the short answer. The problem really was that Brazil had this huge improvement in its terms of trade related to the rise in commodity prices over the past decade. So it suddenly was earning an awful lot more from its exports than was previously the case. Now, Brazil took that income, spent it, and not only did it spend it, it leveraged itself on that extra income. So it spent it and more. The problem, of course, was when that income started to fall because commodity prices fell back. That left a big hole in Brazil's balance sheet. So you had the current account deficit widen, you've had problems now in the public finances, as we just discussed, problems of over-indebtedness in the household sector and the corporate sector. And so you've got this big balance sheet adjustment that needs to happen. Now, part of the way through this is going to be a weaker currency. Eventually, interest rates are going to have to fall. There's going to have to be some fiscal austerity too. But it's really, because of the political dysfunction in the country, it's difficult to see a way through this. And of course, the more that the political dysfunction feeds into policy paralysis, then the more painful this and prolonged this adjustment is going to be. So at the moment, on the debt side, both have performed pretty badly. And that's for a variety of reasons, but primarily because of the increased amount of debt that's been loaded onto both in recent years. I suspect actually that most of the debt problems exist in the corporate sector. There's a way out of this for the government, and that relates to the fact that the debt is largely in local currency. So they therefore have a lot more options and room for manoeuvre. So financial repression, ultimately they can inflate their way out if they decided they needed to, and of course fiscal austerity, politics, depending. For the corporate sector, it becomes far more difficult. the one glimmer of hope, I guess, is that a lot of this debt was made by the State Development Bank, BNDES, and that was made at low interest rates. So that's really helped to ease some of the strains on company balance sheets. But certainly large corporates, in particular Petrobras is the obvious one, I think are going to be under strain for a long time to come. It's going to be a pretty challenging year, I think. Politics is obviously part of the problem, but also there's this underlying increase in private sector debt, which has not really come to the fore yet. A lot of the focus has been on the sovereign side, but in the private sector side, there's been an awfully big expansion of private sector debt. The type of expansion in debt, the pace of expansion in debt in the private sector that we've seen in Brazil, when we've seen it elsewhere in the emerging world, it's typically resulted in some form of banking crisis now. Brazil may be different for a whole variety of reasons, not least the fact that this debt was made by public banks in local currencies, but I think it's pretty ominous. And the one glimmer of hope, I guess you could say, is that from the perspective of the bond market, inflation looks like it's peaked. It's going to come down, I think, over the course of this year. It could well come down a bit more quickly than most in the market expect. If we're right on that, then bond yields should start to come down too. That's really the only glimmer of hope. I think in terms of the debt stress side of things, I think the picture's going to get worse.